Hello traders, it's Wednesday, September 20th, and this is Alan Hong market list of GKFXPrime. So I'm gonna share my daily analysis through this video, and first of all, let's review the major market movements. So the first instrument we are referring here is the US dollar index. So the currency which measures the greenback's rank against a trade weight basket of 6 major currencies, and it was fell by 0.01% to 91.8 on Tuesday, as a mixed report on US housing activity was weighed on the sentiment, but easing geopolitical uncertainty was limited the losses in the greenback. So the dollar came under pressures after a pair of mixed reports on the US housing sector, which tempered the investors' expectations of a solid third quarter growth. So according to the Commerce Department says on Tuesday, the US home building was fell 0.8% to a seasonally adjusted annual rate of 1.18 million units in August, so well below economists' estimates of a 1.7% rise. And the report also highlighted a sharp 5.7% rise in building permits to a rate of 1.3 million units, and that was the highest level since January, beating the forecast of a 0.8% decline. So the duo of reports comes as the Federal Open Market Committee two-day meeting got underway on Tuesday. Amid expectation, the policy-making FOMC will announce plans to begin unwinding its 4.5 trillion bond portfolio at the conclusion of its meeting on Wednesday. So as well as plans for balance sheets unwindings, the Federal Reserve summary of economic projections and dot plot are expected to gain much of their attention, as investors are keen to assess whether the slowing pace of inflation has altered the central bank's long-term view on interest rates. So downside momentum in the dollar was limited, however, as it made strong gains against its safe haven counterparts like the yen and Swiss franc amid fading geopolitical uncertainty on the Korean peninsula. While the single currency continued its upside, with the pair Euro-USD tack on 0.09% to trade at around 1.1966. Despite data showing Eurozone institutional investors were less optimistic about the 6-month economic outlook for the 28-member bloc. And having a head in commodities markets, the gold price was flat on Tuesday, fell 49 cents or 0.04% to trade at around $1,311.27 a troy ounce, as President Donald Trump's threat that America would totally destroy North Korea if forced to defend itself or its allies did little to raise safe haven demands, as investors focused on the two-day Federal Open Market Committee, which concludes on Wednesday. So President Donald Trump said, if the US is forced to defend itself or its allies, we will have no choice but to totally destroy North Korea. So President Trump's latest threat to North Korea was failed to garner much attention, as investor focus remained on the two-day Federal Open Market Committee meeting that will conclude Wednesday with a statement on monetary policies. So as well as announced plans to unwind its 4.5 trillion balance sheets, the US Central Bank is expected to provide market participants with an insight into its thinking on the additional rate hikes and the progress of the US economy. So according to the chief market analyst with Think Markets, Naim Aslam said, the Federal Reserve is going to make sure that the process will stay as smooth as possible, and this would likely push them to hold their gradual approach in hiking the interest rates. So the odds of a December rate hike are standing at 40%, but a hawkish tone by the Federal Reserve could strengthen the dollar index, he added. So the gold price is actually sensitive to move in the US rates, which leave the opportunity cost of holding non-yielding assets such as bullion. As for the oil price, it was settled lower on Tuesday as the US crude stock rose less than expected, which followed comments from Iraq oil ministers Jabal al-Waibi on a possible extension to the OPEC-led agreement to cut oil output. So according to the American Petroleum Institute, the API said on Tuesday, US crude stocks was rose less than expected 1.4 million barrels at the end of last week. So analysts expected a 2.925 million barrels built in crude and a 2.025 million barrels barrels decline in gasoline and 1.175 million barrels fall in the distillate. On Wednesday, official data from the Energy Information Administration's the EIA is due, and the API and EIA figures often diverge. So also weighing on the crude prices was a report from the Energy Information Agency on Monday showing US shale production is set to rise for the 10th straight month in October as a recent uptake in US oil prices above $50 a barrel was spurred the drilling activity. So now let's review the highlighted economic data and events that on yesterday, which is Tuesday. So on Tuesday, the German has released its ZEW economic sentiment, which better than expected with 17, okay, compared to the economist forecast at 12.5, right? So besides that, United States was released a series of data that's regarding to its housing sectors, and the most important data will be the building permits for August, and it was at 1.3 million growth, which is better than the expectation as well, right? So the last data on yesterday is the API weekly crude oil stock, which showed a less increase in the US crude stocks, which with 1.443 million. All right. So for today, we get a series of data and event from the United States as well as the United Kingdom, alright? So during the European trading hours, the United Kingdom is going to release its retail sales for August, which can be referred as the inflations, okay? And also the main indications for the retail sales sectors in the United Kingdom, alright? So this data is expected to be slightly lower compared to the previous 0.3% growth, okay? So the forecast is just at 0.2%. So during the North American trading hour tonight, United States is going to release the existing home sales data, okay, which expected to grow slightly from previous 5.44 million to 5.46 million. Okay, so we get another crude oil data tonight as well, which is the crude oil inventories. It's going to release by the Energy Information Administrations of United States, the EIA departments. Okay, so besides that, the highly anticipated event tonight is the FOMC meeting conclusions, alright? So we should focus on the economic projections of FOMC as well as the dot plots that is going to release by the FOMC. Right, so now it's technical analysis sessions, and first instruments we're referring to the Great British Pounds against the US dollar pair in 4-hourly charts. So the sterling was continuously supported by the expectations on Bank of England to hike rates end of the year. So in 4-hourly charts, it's remained traded above the both moving average lines, followed a retracement from recent high of 1.362. So the both moving average line continued expanding upwards, but however, referring to the MACD indicator, the both movement lines were crossed and pointing downward. Additionally, the momentum level fell to negative territory, so the pair GBP USD is suggested to be traded weaker in short terms. So with a daily closure above the resistance level of 1.362 will be a signal for continuation of uptrends. Then we could refill the next resistance level at 1.377. So on the downside, the Fibonacci retracement level of 23.6 or 1.342 of support levels considered as the retracement threshold. So closure below these levels may lead to experience short retracements. Alright. So while UK is due to release its retail sales data, which could provide further indications on the growth of UK retail sector and inflation. The single currency continued its upside on Tuesday, despite the data showing Eurozone investors were less optimistic about the 6-month economic outlook for the 28 member blocks. So the pair EUR-USD was closed higher than the resistance level of 1.199 in daily charts, and now testing at a strong psychological resistance level of 1.2. With a daily closure above this level might lead for further upside and a test again at the previous high of 1.21. On the downside, we could refer to 1.193 as the nearest support level. The Kiwi was traded higher on Wednesday morning sessions amid the better than expected result on New Zealand current accounts, but however the pair and ZKUSD remain traded within the range between 0.723 and 0.732, and currently it is hovering near the resistance level of 0.734. So in 4-hourly chart, the both moving average line started expanding upward, thus with a daily closure above the Fibonacci retracement level of 50 or 0.735 will be a signal for shifting in trend directions to become uptrends. So then the next resistance level can be seen at 0.739. So on the downside, the bearish momentum only can be extended with a closure below the support level of 0.723, and traders will eye on the second quarter growth data from the New Zealand till Thursday early morning on 6:45. Aussie remained thin trades and mostly flat on Tuesday despite a fall in the dollars, so the pair AUD-USD was held steady between the both moving average line in 4-hourly charts. So this was suggesting for further ranging in trade in short terms, but however, the pair still considered in an uptrend structure, thus with a daily closures above the previous high or the resistance level of 0.812 with a signal for continuations of uptrends. Then we could find the next resistance level at 0.828 as the long-term target. So for the downsides, breaking below 0.793 will lead to experience a short retracement. The safe haven Japanese yen was slightly stronger during the Asia trading hours on Wednesday, as a series of data released by Japan officially were mostly optimisms. So the pair USD JPY was traded slightly lower for the release of the series of data. But however, the pair remained traded above the both moving average line in 4-hourly charts, which meaning an uptrend structures. So additional with continuations of upward expansions of both moving average lines, it is suggested to move further higher following a daily closure above the previous high at 111.9. So on the downside, closure below the Fibonacci retracement level of 110.7 is suggesting to experience a short retracements. While Bank of Japan is due to reveal its monetary policy on Thursday, and the outcome might show the further directions of the Japanese yen. Gold prices were flat on Tuesday as President Donald Trump threats that America would totally destroy North Korea if forced to defend itself or its allies, that later to raise safe haven demands as investors focus on the 2-day Federal Open Market Committee, which concludes on Wednesday. So the precious metal was traded vehicle for the informations of death caused by both moving average lines in 4-hourly charts. So it was closed lower than the support level of $1,321 a troy ounce previously, so signal to experience further retracements. So the next support level we could refer to $1,300, which is the strong psychological support levels. So for the upsides, the bull will only continue with a daily closure above the previous high at $1,358 a troy ounce, but however the Federal Reserve is due to conclude its 2-day meeting on late night today, and traders may gain further information on the timing of Federal Reserve rate hikes. Thus the outcomes might bring further momentum to the precious metals, and gold price is sensitive to move in the US rates, which leave the opportunity cost of holding non-yielding assets such as bullion. As for the oil price, it was settled lower on Tuesday as the US crude stocks was rose less than expected, which followed comments from Iraq Oil Minister Jabal al-Buabi on the possible extensions on the OPEC-led agreements to cut oil output. So the West Texas Intermediate crude price was retreated from recent high of $50.80 a barrel and currently hovering between the both moving average line in 1-hourly charts. So signaling to be traded ranging for short terms, with a closure below the support level of $49.50 will be a retracement signal that might lead for further downside. So for the upside, only with a closure above $50.80 a barrel for the continuations of the bull. So while the Energy Information Administration of United States is due to release its weekly information on United States crude inventories later tonight, and it will be a fresh indications to gauge the global supply and demand level. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.